On August 10, 2025, a strategic alliance was announced that, at first glance, appears limited to the traditional financial sector, but which, upon closer inspection, could have implications for the global economic transition process. We are talking about the partnership between ZAG Trader and Carmel Brokerage. A partnership that aims to modernize Iraq's commercial infrastructure and open the country's doors to global financial markets in a broader, more transparent manner, aligned with international standards. This partnership introduces advanced trading technologies, integrating real-time data, high-precision charts, and instant order execution. The immediate effect is to strengthen confidence in the Iraqi financial system. But the indirect impact may be even more significant, reducing dependence on the parallel market, which has historically driven sharp fluctuations in the value of the dinar. When a country adopts modern trading platforms and supervisory mechanisms with international standards, it moves closer to integrating with a sovereign economy backed by real assets, as envisioned in the context of the Global Currency Reset, GCR, and the NESARA and GESARA guidelines. It's a silent step, but one that could pave the way for Iraq's definitive entry into the quantum financial system, QFS. A crucial point of this partnership is the diversification of available financial instruments. Iraqi investors, previously limited to the oil sector and the direct impacts of its volatility, now have access to global stocks, bonds, and commodities. This diversification, in addition to reducing exchange rate risk, creates new routes for foreign currency inflows into the country, strengthening the foundation for a stable exchange rate. And in the context of the GCR, each country that diversifies its revenue sources becomes less vulnerable to external pressures and better prepared to align its currency with an international standard backed by gold and tangible assets. From an operational standpoint, the partnership brings automation and efficiency to the processing of large transaction volumes. This isn't just a productivity gain, it's also a way to strengthen public confidence in the banking system. It's worth remembering that currently, approximately 80% of physical currency circulates outside Iraqi banks. If this confidence is restored, the flow of dollars and dinars into the formal market will increase, weakening the parallel market and stabilizing the official value of the currency. This modernization is aligned with the Banking Reform Document of 2025, prepared by the Central Bank of Iraq, which aims to adapt the banking sector to international standards and resolve crises, such as the liquidation of institutions that fail to return deposits to customers. By creating more efficient formal exchange channels, the partnership can reduce the gap between the official exchange rate, currently around 1,300 dinars per dollar, and the parallel exchange rate, which reached 1,520 dinars at the beginning of the year. However, it's important to understand that the impact on the exchange rate will be indirect and dependent on broader factors. Internal disputes over oil exports, international sanctions, and regional instability may still exert pressure on the currency. However, by inserting Iraq into a more modern, traceable, and transparent financial environment, the partnership contributes to the country's readiness to integrate into a global financial network based on real assets, as envisioned in the GCR and the QFS. The current scenario shows that the Central Bank of Iraq maintains the exchange rate classified as conventional, with control over its exchange rate policy. The introduction of ZAG Traders technologies and the efficiency of Carmel Brokerage can help channel transactions to official platforms, strengthening monetary authority and reducing the scope for the informal market. In the geopolitical context, each step like this brings the country closer to a financial environment in which currencies will be physically backed and transactions guaranteed by quantum technologies. The strengthening of the dinar is not just an internal issue, it is also preparation for a global scenario in which all currencies will undergo a process of revaluation and realignment, based on tangible assets. In this sense, what appears to be merely a technological modernization in the Iraqi market may actually be paving the way for one of the most anticipated stages of the global monetary redesign. Thus, the alliance between ZAG Trader and Carmel Brokerage should not be analyzed solely from the perspective of stock and bond trading, but as a strategic move that strengthens the infrastructure necessary for exchange rate stability, international credibility, and Iraq's future integration into a sovereign, secure, and transparent financial system. And in the larger geopolitical landscape of the GCR and the transition to the QFS, each advancement as this is another step toward a new global monetary standard, where stability, transparency, and real backing will be the new rules of the game. And if you want to continue following how these financial movements shape the future of the global economy, subscribe to the channel now, turn on notifications, and share this content. This way, you'll always be one step ahead in understanding what's really happening behind the scenes of the global monetary transition.